Hi, everyone. I'd like to thank you for taking a little bit of time to join me for this brief discussion on why investing in self-storage is a great option. My name is Christy Brock, and I'm with WeCRE. That stands for We Invest in Commercial Real Estate. So give me one moment while I share my screen, and then we'll get started. Okay, so here we go. Self-storage is a great asset class. The customers are very sticky. What does that mean? So customers are willing to accept small rent increases without moving their belongings. So in self-storage, we typically will increase rents twice a year, and it's every 6 months or so. And those increases are usually between 3 and 5%. So if someone has a rental for, let's say, $100, they're not going to move over a $3 increase. And you can, keep doing that every 6 months or so. It's recession resistant. We'll get into this a little bit more later, but essentially, when you look at occupancies for self-storage versus other sectors or versus the GDP, it remains constant. And we'll go through that a little bit later in another slide. The 3 T's: no tenants, no toilets, no termites. These are very important things. So with self-storage, we have customers, we don't have tenants, which is a very important distinction. With customers, and customers are generally on a month-to-month basis, with customers, the types of complaints, the types of issues that you're dealing with are all very different. The couch in 3B never complains about the boxes in 4B. So it's just a whole different thing. Toilets are not going to overflow because there are no toilets, and no termites. The construction is generally cement block and metal, so you don't have to worry about those issues. That also becomes very important when you're looking at the remodeling or making improvements. The costs are significantly lower. The returns are very easy to affect, or easier than in other asset classes, because through some very simple low-hanging fruit, you can always increase your NOI. And we'll talk a little bit more about that later also. The industry is huge. Almost $40 billion annually is what it's estimated to be. About 10% of US households use self-storage. If you're not using it, you know someone who has, who is currently or has in the past. Most of the facilities are owned by small investors, mom and pop shops, and those small investors are unable, or seem to be unable, to adjust to the post-COVID reality of technology is important, SEO, contactless entry, customer service spanning 12, 16 hours a day as opposed to just one 8-hour shift. So all of these things are having a very big impact on the opportunity that's available, because you can come in, professionalize a facility, and then get a lot of bump in your income and decrease in expenses as a result. Massive amounts of storage. There's a 1.7 billion rentable square feet. And that really is an estimate, because half of the facilities don't have websites. And so there's a lot of information that we lack about self-storage facilities. America needs storage. There's the 6 Ds is what we call it: divorce, death, downsizing, dislocation, and disease, disaster. So all of these are reasons why people need self-storage, and constantly, regardless of the economy, regardless of a whole lot of other things that are going on, these things still happen. Divorce still happens, death, all of this still happens. You inherit grandma's furniture. No one wants to put that French provincial furniture into storage, but you have to, because you don't have space at your own house and you just don't know what to do with it. Businesses also keep business records. You have to keep, 5, 7, 10 years of business records. Most businesses still have paper records, and so they need to store those things somewhere. You also have entire businesses that are run out of self-storage. If there's drop shipping, if there's a parts company, you can have a central location without having your own warehouse. You're basically, for a very reasonable fee, usually utilizing someone else's warehouse space. We all love our stuff. We're not getting rid of our stuff for whatever reason. Self-storage is recession resistant. So when you look at these four periods in history, in 1987, 2001, 2008, and 2020, all of these recessionary periods, the occupancies for self-storage remain fairly constant, while GDP and the economy at large is going up and down, lots of problems. And, these occupancies, when you compare it to multifamily, for example, COVID occupancies decreased. You also had a lot of non-payments, a lot of problems. The same for the Great Recession. People lost their homes, and people moved into apartments, but occupancies were fluctuating. You didn't have that effect in self-storage. Controllable expenses and income. With any business that you're running, especially if it's multifamily or apartments or whatever office, one of your biggest expenses is going to be payroll. In self-storage, we can largely decrease, almost eliminate our payroll expense through automation and technology. And this is one of the very important aspects to consider. With self-storage, you don't need a property manager who's trying to wear all of the hats, who's trying to do lease up, who's trying to do collections, who's also worried about marketing, security. You don't have all of that. You can eliminate a lot of that with technology, which means on any given facility, that's anywhere from $40,000 to $80,000 in expenses that you can get rid of day one, which significantly hits your bottom line. Low utilities. Since there's no toilets, there's no, it's just not a part of your business. There's very little expenses for water, sewer, and electric. Your costs are low because you can automate that with timers, with motion sensors. So you really have a good control over your electric costs. Your turn costs. It's a metal box. When someone moves out, you sweep it up, and there you have it. Low maintenance. Again, with metal and block construction, you don't have the deterioration, you don't have the termites. It's a much easier structure to maintain than an apartment with countertops and flooring and toilets, and a much heavier use. So in self-storage, people bring their belongings, and if they're there for 3 years, maybe once they get their things in, they don't use the facility again until they're taking their belongings back out. Most people don't just go and visit their things on a regular basis. Income. It's very easy to increase income for storage because you have a lot of low-hanging fruit. As we've already discussed, you have people who are moving, so you can sell moving supplies and boxes and that sort of thing. Or you can add RV and boat parking, which is a really great way to increase your income if you have a large parking lot, if the facility that you have is a conversion. And speaking of conversions, it's very easy to take a vacant retail space and just put in walls and doors, and then you have storage. Relatively inexpensive relative to building apartments and other commercial real estate classes. Speaking of other commercial real estate classes, how does self-storage compare to multifamily, office, and hospitality? Well, let's just take remodeling, for example. If you are buying a 100-unit multifamily facility, for example, you say, okay, I'm going to remodel this over the next 3 years. I'm going to do 30 units each year. In year one, it's going to cost me $10,000. In year two, it's going to cost me $10,000. In year three, it's going to cost me $10,000 per door to do the remodel. But what people forget to plan is that it doesn't cost $10,000 in year three. It costs $12,000, $13,000, $14,000 in year three, just because your expenses creep up. The cost of steel, the cost of wood has skyrocketed over the past few years. It's very difficult to get your materials on time and to get tradesmen on time. Whereas with self-storage, you know upfront exactly what needs to happen, and all work can happen within, say, a 6-month period. So you're not going over budget in the same way you would with other aspect classes. Unexpected expenses. So if you have multifamily, which has 1-year leases, office, which has 3, 5, 10-year leases, or hospitality, less so, If you have expenses that come up, let's say you're in Texas and you get a big tax bill, you can't pass that along to your customers immediately. Whereas self-storage, because it's month to month, we can always just raise rents by 1, 2, 3, 5% with no problem. That's a very important distinction, especially when you're talking about office. Within office, if you sign a 3-year lease or a 5-year lease with someone, and then your insurance bill pops up 40%, as has happened in Florida, 40, 50, 60%, then you have no recourse. You have to wait until you can renegotiate those leases in order to increase your income. So you're going to take a hit for a few years. Hospitality is at the whim of the economy. When the economy is good, hospitality is good. When the economy is bad, people just aren't traveling as much. Also, we have something like, COVID, major disease that put a damper on hospitality and other asset classes. Across market cycles, self-storage, we already saw how self-storage performs, and we know what's happened with office over the last market cycle. People started working from home. Office occupancies are severely decreased in many cities across the United States. It definitely is a problem. And the overall management, hospitality is a business. It is very labor intensive, very management intensive. Office, much easier to manage. You have fewer tenants. So maybe you have anywhere from 1 to 10 tenants, whereas in multifamily, you have hundreds of tenants sometimes. So overall management for self-storage is very easy relative to many other asset classes. So in review, assets, comparing different asset classes, self-storage is a great one. No tenants, no termites, no toilets. Making improvements, very easy. You can control your costs. There's a huge market potential because there are so many unsophisticated owners that can't take advantage of the technology and the actual management. If you haven't seen the interview I did with Brett Copper of Copper Storage Management, go back and watch that one. He talks about how remote management and the remote management model really has taken off with or in the post-COVID era. America loves their stuff. We're always going to need to store it. Recession-resistant industry, easy to control expenses, and it's a great option versus other CRE. I'd be more than happy to talk with any of you more about why self-storage is a great option. Please reach out to me. I can be reached at investors@wecre.com or get on my Calendly link and schedule some time to chat. Thanks for listening. Have a great day.